The meme stock rally has returned. GameStop up 44% just over the past week. AMC Entertainment soaring 55% as individual traders pile in. Is the run-up for real this time? Joining us is J.J. Kinahan, Chief Market Strategist, TD Ameritrade, and Joe Terranova, Senior Managing Director at Virtus Investment Partners, and, of course, a CNBC contributor. Good morning to both of you. J.J., we're looking at these just the volume, the move. What are you seeing on the consumer side of the folks that are using your platform?
Yeah, well, we've definitely seen volume increase this week, Andrew. GameStop's been pretty interesting in the fact that, you know, last time it ran up, if you remember, in early March, it ran up from 220 to above 300. We actually saw our clients be more on this, turn to a bit of sellers on the last run up. Came back down, you know. Then from April 12th to May 12th kind of bounced around. May 12th, we saw our clients start to become more buyers again. We really started to see volume increase at the end of last week, much heavier into this week, but it's been pretty even on buys and sells. Conversely, with AMC, we've seen our clients actually, as the calendar turned to May 1st, we saw our clients start to buy AMC. We've seen more volume in terms of shares in AMC, but I think that's more a function of price point than necessarily liking it. It's just a cheaper stock, so more people can afford to participate in it. So with that, what's
Joe,
interesting, Andrew, is go ahead. Sorry.
Go ahead, JJ.
I was just going to say, no, sorry. I was just going to say, with AMC, we've seen volume really surge this week. But what's interesting to me is it's been much more even on the buy and sell side than it was earlier in the month.
Joe, what do you do about this? I mean, if you're a fundamental investor, you obviously you don't even know what to do. If you maybe just want to play the psychology of it because it's fun and it's a game, I don't even know how to even really start this conversation in a meaningful way.
Well, the first thing you don't do is you don't short these stocks. You're seeing a rotation. The rotation occurred in the middle of February through the early part of March out of momentum names into the Wall Street bet Reddit type names like you're mentioning, AMC and GameStop. The same thing is occurring now as cryptocurrencies are unwinding some of the excessive leverage. Money's moving back in. But, Andrew, let's not think that this is just all retail traders. This is institutional money. This is hedge funds. They're participating on the long side. And I don't think you fight it. And I'll tell you this. I watched Jim Cramer last evening. I think Jim's right. The question now becomes, where else do they target stocks? Do they go to Beyond Meat, which has a 24% short interest? Do they look at Roblox, which is trading incredibly strong? I think ultimately that they do. But you don't short these stocks.
Okay, so if you don't, but I want to go back to the comment you just made. And we were just talking to JJ, obviously, about the retail customer. But let's talk about this institutional hedge fund customer that you think is trading this stock. Tell me what the conversation is behind the scenes. When you talk to some of your friends on the street, in the trading community that are playing this, what do they tell you that they're thinking?
They're thinking that volatility has declined significantly. Therefore, they could seek the leverage that they're not going to be getting from the traditional broker-dealers. You and I both know that leverage was pulled back significantly after this first experience. So volatility's come down. They could explore leverage in other derivatives. And clearly, the algorithms right now are recognizing the price momentum. They're attracted to it. And they are utilizing that momentum to align positions accordingly from the long side.
But they think this is a trade. Do they think this is a trade, or they think it's actually a fundamental investment? It's a trade.
Oh my God, no! Fundamental investment?
I'm just asking because you go on Reddit, and there's a lot of folks out there who talk about this as if they are fundamental investors and that they are going long to the moon, as we know. With GameStop because they believe in the future of GameStop. And I'm not telling anybody not to believe in the future of GameStop, but of course there's a question of what the valuation of the future of GameStop will ultimately be.
Well, I'm trying to figure out what the price of the moon actually is. Let me know when we realize that, so I know when we reach it that there'll be sellers. But the fundamental story here is all about Ryan Cohn. You know, what are the plans for What is Ryan Cohn going to be doing with this company? I mean, Andrew, can you walk in the store and do anything other than buy the hardware, which you could buy at another big box retailer? What product am I actually purchasing from GameStop?
There are
so
these
no, it's not about the fundamentals.
Well, there's a conversation. I mean, look, I don't know what they're going to do. There's speculation about NFTs and the like, creating their own and trying to build an ecosystem around that. I don't know how that would work, but
that's exploring the creativity of Ryan Cohn, and I'm not betting against Ryan Cohn, but the fundamental argument, listen, that's questionable.
Shepard Smith here. Thanks for watching CNBC on YouTube.